Welcome back, everyone, to the deep dive. Today, we are going to take a deep dive into business models and what it actually takes to start a business. We've gathered a really interesting and diverse mix of insights for this one from a variety of YouTube channels. We've got Valuetainment, Simon Squibb, Ali Abdaal, Big Company, Mark Tilbury, Alanis Business Academy, and Marketing Business Network. So quite a spread.
Yeah. A lot of perspectives to consider today, and I think our mission in this deep dive should be to kind of distill what are the core takeaways and maybe some surprises. What are the different ways businesses actually make money and those crucial first steps you need to think about when you're starting off?
Exactly. We want to equip everyone listening with real actionable knowledge without making it feel overwhelming.
Right, because we've got everything from really concise lists of revenue models to some super in-depth conversations about the entire journey of building a business and scaling it up.
It's like the Cliff's Notes to a whole library of business books. So let's kick things off with the topic of business models. Valuetainment laid out a really clear framework with several distinct categories of how businesses can actually generate income.
Yeah. And they start with just the most basic model, the one we're probably all familiar with, which is pricing a product or service based on your costs plus a margin. So if
Yeah.
you buy something for $20 and you sell it for $30, that $10 difference is your margin. It's essentially the bedrock of traditional retail.
Right, the classic markup. And then they highlight the power of recurring low subscription payments, the Netflix model, essentially,
Yeah,
where $10 or $15 a month might not seem like a lot individually,
right.
but when you have millions of subscribers, that really adds up to substantial and predictable revenue.
Yeah. You've got that consistency of small payments from a large customer base.
Yeah.
Very powerful.
Absolutely. And then another model they touch on is tiered pricing based on volume. So the more a customer buys or the more business they bring you, the better the rate or the commission they receive. Think about how real estate agents work or insurance brokers, where higher sales volume actually leads to a different percentage structure.
Yeah, it incentivizes larger transactions.
Exactly. Then there's simply taking a percentage of every transaction, the classic commission model.
Yeah, your earnings are directly tied to the value of what you sell.
Sales roles are the most obvious example of this, where your income is literally a direct percentage of what you close.
Right. And then something we see everywhere nowadays is a low initial price for the product itself, but then charging extra for support services.
Oh, yeah.
You might get a piece of software for a really good price, but then you need to pay an annual fee for customer support or access to advanced features. It kind of lowers that barrier to entry for the customer, but then opens up opportunities for ongoing revenue for the business.
Yeah, it's like the printer and ink cartridge model, right?
Exactly.
You get the printer at a great price, but then the ink is where they really get you. Then there's that low entry price with additional features priced separately. It's like when you buy a basic car and then each upgrade a sunroof, a better sound system, whatever it is, that all adds to the cost. It allows customers to tailor their purchase to their budget, but also gives the business multiple avenues to increase revenue.
And then kind of related to the last one you mentioned is the model where the product price is actually low, but the real profit comes from the replacement or disposable items.
Yeah.
The classic example, razors and razor blades. The Procter& Gamble strategy.
Mm-hmm.
The initial purchase is not that expensive, but then that ongoing need to buy new blades generates consistent revenue.
A really smart strategy. Okay, let's switch gears now and dive into some key insights on actually starting a business. We're going to draw heavily from Simon Squibb's extensive experience here, and his very first point might actually surprise you. He says that starting a business doesn't necessarily have to be about this groundbreaking, never-before-seen idea, or even meticulously finding this gap in the market.
That's right.
It can simply start with a feeling, a gut instinct that something needs to change, a passion for something you truly believe in.
Yeah, he even pointed to his own agency Fluid, which he launched, even though there were like 500 other agencies doing the exact same thing. It wasn't about being completely unique. It was driven by his passion for marketing and that drive to just create something of his own.
So it really underscores the power of passion, right?
Absolutely.
Aligning your life with your business, doing what you love and getting really, really good at it. And his advice, outsource what you don't like. Free yourself up to focus on your core strengths and what truly motivates you.
Yeah. And when it comes to actually generating ideas, it's about finding that intersection of your passions and a viable business model.
Right.
Applying a commercial perspective
Yeah.
to what you're already deeply interested in. And he talked a lot about the value of partnering with people who bring complementary skills to the table. Like how he partnered with someone specifically for the visual side of things
Mhm.
because that wasn't his strength,
Yeah.
recognizing you don't have to be an expert at everything.
That's so important.
Yeah. And he was very adamant about experimenting with revenue models.
Oh, interesting.
Don't feel locked into a single approach right from the start. He gave the example of how Fluid actually transitioned from billing clients hourly to taking a percentage of their sales based on their results.
Oh, wow.
So it highlights the importance of being adaptable and willing to change as you learn and grow.
That's a great point. And he's a huge advocate for the power of purpose. Having a mission for your business that goes beyond just making money,
Right.
that purpose can be a really strong unifying force for your team, and it can attract customers who resonate with your values.
Yeah, he even suggests that when you have a strong purpose, you're not really managing people, you're managing that purpose. The team aligns around that shared mission.
That's a really cool way to think about it. And for those of you who think you need a ton of money to start a business, Squib offers a more encouraging perspective. You can actually start with very little or no money by focusing on a service-based business or some kind of revenue sharing arrangement.
Yeah, he even told the story of Airbnb in their very early days actually selling cereal boxes at conventions to raise some initial funds.
Yeah.
It just shows the power of resourcefulness, being scrappy and willing to start small.
That's fantastic. Okay, let's move on to the question of how to actually win in business. And this is where Squib really emphasizes the concept of delayed gratification.
Yeah, this is a really interesting point. He talks a lot about building strong relationships and going the extra mile, even delivering value for free up front. It's about playing the long game, building trust, generating referrals, rather than always being focused on immediate profits.
And he also emphasizes the importance of having a very clear moral code and building a very customer-centric culture within your business.
Right.
He uses Amazon as an example of a company that really prioritizes delivering value to their customers.
And then there's this really fascinating concept he calls hacking luck.
Hacking luck.
Yeah.
Okay.
And he breaks it down into 3 parts.
Yeah.
Persistence, essentially outlasting your competition by simply caring more about what you do, defining your destination, being really crystal clear about what success actually looks like for you, and then putting in the work to get there. It's about being intentional and recognizing that luck is often the result of consistent effort and clear goals,
Yeah.
rather than just something random that happens to you.
So it's about being proactive in shaping your own destiny in a way.
Exactly.
Interesting. Okay, let's move on to a topic that a lot of people might shy away from, which is failure. And Squib really embraces it.
Yeah, he actually dedicates a lot of time to talking about how important failure is. He believes that accepting failure as part of the process and actively learning from those experiences is crucial to success.
Mhm.
He even shared his own story of losing £1,000,000, yes, £1,000,000, on a comic book venture that ultimately failed. But that failure taught him some really valuable lessons that helped him succeed later on.
So it's almost like failure becomes a stepping stone in a way,
Right.
not the end of the road.
Exactly. He also talks about letting go of ego, both external and internal, not being afraid of being underestimated and having that deep inner belief in yourself, regardless of what others might say or what temporary setbacks you might encounter.
Right. And he even jokingly recommends aiming to be a D student in some areas,
Oh, interesting.
not letting that fear of not being perfect hold you back from taking calculated risks and trying new things.
That fear of failure can really be paralyzing.
Yeah, absolutely. Okay, let's move on to a really interesting alternative to the often intimidating traditional business plan. Squib is a big proponent of mind mapping.
Yeah, he sees it as a much more flexible and actually a much cheaper tool for exploring potential business avenues. The idea is to start with your core passion or hobby and then visually branch out from there, exploring related ideas and possibilities. He gave the example of his own business, Free Humanity, and how it organically evolved to include podcasts, brands, and app. It all stemmed from that initial core idea.
So it's a more fluid approach to brainstorming and allows you to consider different potential revenue streams really early on in that process rather than being confined to this rigid, predefined plan.
Right.
Now, finding a co-founder is a big decision, and Squib actually compares it to finding a life partner.
That's a great analogy.
It's about finding someone whose skills complement your own, where your weaknesses are their strengths, but someone who shares your core values and principles.
Yeah. And he really stresses the importance of being honest with yourself about what you genuinely enjoy doing and what you absolutely hate doing.
Hmm.
That helps you pinpoint the gaps that you need a co-founder to fill.
Right.
He even recommends writing out a detailed profile of your ideal co-founder,
Okay.
almost like a dating profile for a business partner,
Yeah, I love that.
and then actively putting that need out there in your network, being open to serendipitous connections.
Very cool. Okay, let's talk about the art of selling. This is another area where Squibb offers some really interesting and perhaps counterintuitive advice.
He uses this great phrase, selling the sizzle, not just the steak.
Oh, I like that.
Think about Apple product launches. They're not
Hmm.
just talking about the specs, they're talking about the lifestyle,
Right.
that aspirational feeling you get when you use their products.
The transformation. And he talks about the power of getting others to sell for you.
Right.
He gave an example of his own accountant actually being a really effective salesperson because she understood the value that they provided to clients and could articulate that in a really genuine way.
And he breaks the selling process down into 3 essential steps.
Mm-hmm.
The first one, you have to deeply understand your customer. Do your research. Figure out their needs, their pain points. Then cultivate a genuine connection. Do you like them as people? Do they like you? That rapport builds trust. And then, if those first 2 steps are in place, he says the deal will often just happen naturally.
Okay.
It's not about pushing a product. It's about building relationships first.
Absolutely. And thinking long-term in sales is key. He shared his own experiences of reaching out to companies over and over again for years, sometimes up to 9 years,
Wow.
before they finally became clients.
That's persistence.
Talk about persistence. It's incredible. And he also emphasizes letting your authentic personality shine through in your sales approach.
Yeah, people connect with genuine enthusiasm and honesty.
Absolutely. Now, marketing can often feel like a really overwhelming beast, but Squibb actually gives a refreshing perspective on it.
He frames marketing as fundamentally about connecting with people over time.
And he says branding is the ultimate long-term manifestation of that connection. It's not just about a logo, it's about the entire perception of your company in the minds of your customers.
Right. He emphasizes that marketing isn't this isolated activity, it's an integrated system.
Right.
That includes public relations, PR, consistent brand messaging, and ensuring you have a strong product market fit, that what you're offering actually meets a need in the market.
It's about understanding your target audience really well and tailoring your message to resonate with them.
Yeah,
And he says in today's world, having a strong personal brand is not optional anymore.
right.
It's essential for building trust and making connections.
Yeah.
He recommends focusing on one social media platform really well initially, or setting up efficient systems to manage multiple platforms without spreading yourself too thin. And he makes a great point. Marketing should be fun.
Oh, yeah.
If you enjoy it, that enthusiasm will be infectious and it'll resonate with your audience.
I love that. And when it comes to PR strategies, he talks about defining your story, pinpointing your audience, creating valuable content, and building relationships with the press. He even suggests considering PR stunts, doing something unexpected to grab attention.
Very cool. Now, securing investors can be a really big challenge, especially for new businesses. So what are some of Squibb's key insights on that?
Well, he says the more traction you have, the more you can demonstrate that your concept is working, the easier it'll be to attract investors.
Yeah.
But even if you just have a great idea, it's possible to secure funding. You just have to target the right investors,
Okay.
those whose expectations align with your needs in terms of equity, involvement, and industry expertise. He even suggests considering family and friends as a potential early-stage investors, but being very transparent about the risks involved.
That's important.
And here's an interesting suggestion. He says consider people you actually want to work with as potential investors. They might be willing to take a lower salary in exchange for equity, which aligns their interests with the long-term success of the business.
That's a great point.
And when you're approaching angel investors, his advice is kind of counterintuitive.
Really?
He says ask for their advice first, before asking for money.
Oh, interesting.
Show them how they can contribute their expertise. It makes them feel more invested in your success.
I like that.
Creates a little bit of FOMO, fear of missing out.
Right, right.
And with venture capitalists, VCs, he emphasizes the importance of understanding their investment theses and the other companies in their portfolios. He says getting introduced through those existing portfolio companies is a much better strategy than just sending a cold email. And he asks a really crucial question that all entrepreneurs should consider.
What's that?
Do you even need an investor at this stage? Explore all other potential avenues first.
That's such a good point. And speaking of alternative avenues, Squibb sees a lot of potential in securing sponsors.
Yeah, he recommends targeting brands that align with your values, cultivating relationships with key people within those companies, working with media buying agencies to streamline the process. And again, it comes back to that idea of delayed gratification.
Right.
Building those authentic relationships based on shared values can naturally lead to sponsorship opportunities down the line.
So building those connections really is key. Now, building a powerful, enduring brand is essential for long-term success in business.
And Squibb really emphasizes that starting with your own personal brand is crucial. Your values, your principles, your personality. Understanding how others perceive you is a critical first step.
It's about defining your brand's purpose and essence.
Right.
He uses Nike and Apple as great examples, Nike being all about athletes, Apple being all about creativity. And he says having a strong leadership model that embodies the brand's values is absolutely essential.
And here's a really important piece of advice. Learn to say no.
Oh, yeah.
Protecting your brand by declining partnerships or clients that don't align with your values is so crucial in the long run.
Absolutely.
Your brand is one of your most valuable assets.
Okay, let's move on to hiring, team growth, building a great team.
Yeah, this is crucial for scaling up. Squibb stresses the importance of hiring people who genuinely believe in your company's purpose. When you have that alignment, you don't have to micromanage as much.
Right.
People are intrinsically motivated. He also recommends really assessing a candidate's true connection to your mission, looking at their social media, checking references, and offering your team equity.
Oh, yeah, that's huge.
Giving them a stake in the business.
Yeah.
It fosters loyalty and a shared sense of ownership.
Absolutely. And he talks about growing through a strong culture and shared values.
Right. Having a clear vision for where you want to go with the business, taking risks, developing minimum viable products, MVPs, to test your ideas.
Right.
Embracing change.
Yeah.
And he talks about moving from a generalist mindset to hiring specialists as you grow and putting systems in place for greater efficiency.
Makes sense. Now, the idea of going global might seem like a distant dream for a lot of businesses, but Squibb has a really interesting perspective on this.
He says that going global can actually reduce risk because you're diversifying your markets. And it might be more achievable than you think.
Okay.
The first step is doing your research, identifying promising opportunities in other markets, then considering models like franchising or licensing to expand your reach without necessarily establishing a physical presence everywhere.
Makes sense.
And he says, paradoxically, managing a larger global company can sometimes be easier than managing a smaller one because you have the scale and the resources to build specialized teams.
That's a really interesting way to look at it. Okay, let's talk about mentorship.
Yeah.
This is often touted as essential for success, but Squibb has a slightly different take.
He suggests that what you really need might not be a traditional long-term mentor, but someone who can answer specific questions or be a coach to hold you accountable to your goals. He emphasizes doing your homework on anyone you're considering as a mentor, understanding their background, their motivations, and being clear about what you want to get out of the relationship and what being a mentor would actually involve for both of you.
Right. Don't just reach out cold and ask someone to be your mentor.
Exactly. And think about how you can offer value to a potential mentor first, rather than just asking for their time and expertise.
That's a great point.
Build a genuine connection based on mutual benefit. Okay, let's talk about equity.
Okay.
This could be a bit of a confusing topic.
Oh, yeah.
Squibb clarifies that actual control over a company's operations comes from the shareholders' agreement, not necessarily just holding a majority of the shares. He says it's so important to have a very clear equity structure in place from the beginning.
Right.
And he even suggests working backwards from your goals
Oh, interesting.
to figure out the right equity distribution. And for those early stages, when placing a precise valuation on a company can be tough, he recommends exploring safe agreements, things like simple agreements for future equity, or SAFEs, as a way to accept early investment without needing to nail down that valuation right away.
Okay, so it kind of defers that valuation question.
Right.
Very interesting. Okay, let's wrap up by talking about exit strategies.
Yeah, the idea of eventually selling your business.
Right.
Squibb actually offers a kind of paradoxical perspective.
Okay.
He says, build a business you love so much that you never want to sell it. And that, ironically, will make it more attractive to potential buyers.
Oh, interesting.
He also mentions management buyouts and selling to your team as viable options.
Yeah.
The key is build a company that's driven by passion and purpose.
Yeah, that passion is contagious and attractive.
Exactly.
Okay, let's switch gears and talk about a more structured approach to starting a business. Ali Abdal has this really interesting five-step process he calls the castle method.
It's a great roadmap. The first stage is conceptualize.
Mm,
And he emphasizes really focusing on what problem you're solving for your customers, how can you be of service. It's about finding a market for your interests.
right. Then you've got assemble MVP, minimum viable product.
Right.
Abdal points out that a lot of entrepreneurs make the mistake of spending months or even years developing a super polished product before they've even tested the market.
Right.
The Castle method says, start with a very basic version that focuses on generating leads. He uses the example of creating a wand quiz to capture email addresses, offering something of value for free to start building an audience.
Yeah. Everything flows from that lead generation.
Yeah.
Get those initial contacts first.
Absolutely. Stage 3 is test and iterate.
Right.
Get feedback on your MVP from early adopters, refine your product based on that feedback. He shared how his own part-time YouTuber academy evolved significantly based on the input he got, eventually serving a slightly different audience than he had initially envisioned. And this is all about achieving product-to-market fit, making sure what you're offering genuinely meets a need in the market.
Absolutely.
Then we move to launch, where you develop and execute your go-to-market strategy.
Right.
Once you've achieved that product market fit, it's time to really ramp up the marketing and get your product or service out there to a wider audience.
And then finally, you've got expand and scale up.
Right.
Growing the business, maybe opening new locations, introducing new products, expanding to new markets. This is where having some expert guidance, maybe a CEO coach, can be really helpful to navigate the complexities of growth.
So this castle method provides a really clear and practical framework, especially for those just starting out. Okay, let's shift our perspective now and look at a historical example. The story of Walmart, as told by the Big Company channel.
Yeah, it's a classic story of hard work and innovation.
Sam Walton's upbringing instilled in him this incredibly strong work ethic.
Right.
And he started out by learning the basics of retail and then finding ways to innovate.
Yeah, even when he was managing a Ben Franklin store, he was always trying new things, like holding sidewalk sales to move merchandise.
And he faced a lot of early setbacks.
Yeah.
At one point, he was even told that he had no future in retail. But he persevered. He saw opportunities after World War II, bought his own Ben Franklin franchise, and then really started to break away from traditional retail norms.
Yeah. He aggressively sought out cheaper merchandise. He focused on high sales volumes with lower profit margins on each item. And his philosophy was always about making things easier and more affordable for the customer.
Yeah, he really put the customer first.
Mm-hmm.
And he learned some tough lessons along the way, like
yes.
the consequences of a bad lease agreement that forced him to relocate and start over.
And that's how he ended up in Bentonville, Arkansas.
Right, where he insisted on much more favorable terms.
And then his combination of consistently low prices and self-service shopping really took off.
It revolutionized the retail industry.
He was very strategic about expanding his operations, reinvesting profits back into the company. And he also shares some of that success with his employees through bonuses and stock options.
Which really fostered loyalty and a sense of ownership.
Exactly. He was also very innovative when it came to logistics and supply chain management, things like direct purchasing from manufacturers and locating warehouses close to his stores
Right.
to keep costs down. And then he adapted to changing trends with the launch of Sam's wholesale clubs.
Yeah, he was always evolving.
And despite facing some criticism over the years, his focus on providing value to the customer never wavered.
So it's a great example of adaptability, innovation, and really prioritizing the customer.
Okay, now for a totally different perspective, Mark Tilbury's argument, don't start a business.
Yeah, this is an interesting take.
It might seem counterintuitive, but his point is really about timing and preparation.
Yeah, he's not saying don't ever start a business. He's saying focus on developing your skills first.
Right, find your game, as he calls it. Exactly. Dedicate yourself to a job, but work to learn, not just to earn. Really hone your skills. Become an expert in something valuable. And then look for ways to stand out in your current role.
Okay.
Find areas where you can improve things in the business you're working for and document those potential solutions. Then test your ideas through a side hustle.
Okay.
So you can validate them without taking too much risk. And then he talks about the 80-20 rule applied to side hustles. Focus on those activities that generate the most results.
Right.
So his argument is if you launch a business after you've gained those skills and validated your ideas through a successful side hustle, you're much more likely to succeed.
It's a more gradual and strategic approach. Okay, finally, let's clarify what we actually mean by the term business.
Yeah, let's define our terms.
Polana's Business Academy and Marketing Business Network provide some good definitions here.
At its most basic level, a business is any organization that sells goods or services to make a profit. Goods are those tangible products you can touch. Services are intangible, produced and consumed simultaneously.
Like a haircut or consultation.
Exactly. And a lot of businesses offer a mix of both, like restaurants. And importantly, nonprofits are typically not considered businesses because their primary goal is not to generate profit.
Right.
So profit is really that key distinguishing factor.
It's revenue minus all your expenses, salaries, marketing costs, all of that.
Right. And revenue itself is actually a form of validation that you're doing something right.
Okay.
It shows there's demand for what you're offering.
Product market fit.
Exactly. And profit is what allows a business to reinvest and grow.
Absolutely.
And Marketing Business Network points out that the word business can also refer to a specific company, an entire industry sector, or just general commerce and trade.
So it's a really broad term.
It is.
But at its core, it's about selling something with the aim of making a profit. Well, that was quite a deep dive.
We covered a lot. Different business models, the first steps to starting a business, the importance of failure, marketing strategies, sales, funding, branding, team building, and even that alternative perspective on delaying entrepreneurship.
And some really key takeaways. Right?
Yeah. Passion over a completely original idea, delayed gratification, being proactive about your luck, the power of mind maps, and asking for help before asking for money.
Hopefully everyone listening is walking away with some actionable knowledge in those aha moments.
Absolutely. You've got a much better understanding of the world of business now.
And here's a final thought for everyone to chew on.
Yeah.
Thinking about Mark Tilbury's perspective, how might focusing on developing your skills within an existing business give you a real advantage before you go out on your own?
What opportunities might you be overlooking right now in your current role?
That's something to think about.
It is, and we'd love to hear from you. What are you still curious about when it comes to starting or growing a business?
Yeah, share your questions because your curiosity might just shape the direction of our next deep dive.
Exactly.
Thanks for joining us.
Thanks, everyone.